Good morning, everyone. Hope you guys had a great weekend. I'm getting echo. Okay. Good morning. Good morning. That's better. All right. Because I don't think I didn't notice until today. I don't pay that much attention to Bitcoin. It's kind of just been dead in the water, so to speak, for quite a while after this little attempt to move higher here and coming back down. And, was it building a base to move higher? Well, now we know it's not. And down through 6,000, poking around 5,000. And if I remember the long-term chart, I think it was, a year ago back in November, was it at that time? Yeah, it was back in October, November of 17 that it was at around 4,000, and it made that run up to over 20,000 and all downhill. So 4,000 was the starting point. So, sometimes we talk about, the atom and how prices move, and it moved up obviously from much, much lower prices when it was going sideways at 4,000 and then made that big run. Now heading back down, you figure it's going back down there. So we'll see. It's interesting. Wasn't much that I heard anyway talk about it when it had started to drop, but path of least resistance if to a toilet, maybe. I mean, when something is new, these cryptocurrencies now, there's like tons of them, and every scammer's out there coming up with something, try and jump on that bandwagon. That's the way it goes. But, historically, a lot of things that are the first one, and I don't know that Bitcoin was the first one, but, maybe not, but a lot of times it's the one that doesn't last, some, story like Napster, and now the music thing, downloads is a huge thing, but it'll be interesting to see how this goes and how low it goes. And I'm sure it's going to start getting a lot of attention, as this here is a wide range igniting bar to the downside from a base. And that pattern historically says it's going down. And that's a pretty long base. So it would suggest even lower than 4,000. All of this accumulation now becomes supply. And that's not going to be pretty. But hey, and I'm not ready to start trading these things. The liquidity is beginning to increase a bit in these futures, but I thought it'd be interesting to take a look at. Anyway, what we are interested in is the equity markets and stocks. And we're starting off the week here on a little bit of a down note, not so much of a big deal, but it will be a big deal if we don't hold Thursday's low. A big deal to some extent anyway. Hopefully we do, but we had this pullback that started the prior Monday. And then as it headed down into this second gap fill area down here, this is when the ticks hit around minus 1,400. And you had the put call ratio, the idiots loading up on put options to the tune of about value. The ratio was about 1.5, which intraday sets a low, and all that set up a rally right off of the gap fill, an obvious place. So why would anybody be loading puts in an obvious place of support after multiple days down? It's an idiot. And we just monitor the internal gauges that tell us what the idiot's doing. And now we've got this big reversal. It couldn't get through this resistance on Friday, which was a little bit of a surprise. So I don't know whether it was the weekend or whatever. And this morning, obviously, things are down a little bit, but not that big a deal. 270, 280, so 273-ish inside that bar. We'll see, going into the Thanksgiving holiday, the markets historically go up. And the day after that hour or so that some people trade on Fridays is usually a positive. So we'll see how it plays out. We've got this pullback. We've got the head and shoulders bottom formation in place. Will it follow through to the upside? That's what we're waiting to see. So, pre-market resistance up here at 274-ish and a quarter or so. And we can hold this area and get going here. Well, then we can attack this high up here. So, we'll take a look at that, of course. Qs were weaker. This is pulling back a bit more, 166. It's actually under that low, so not a good sign. Concerns now, now Apple cutting back production of their phones. So, the big dog in the NASDAQ not doing too good and pulling back there, 189.70. Down to the bottom here. So that was there. I noticed Google was down, Intel's down, overall negative open here, and we'll just see how far it should go here. Okay, Pat, let's see if Santa's going to come to town or whether we're all going to get coal in our socks here. All right. We got to get through the Thanksgiving holiday. What I write in the letter this weekend, something about if we break down into Thursday's low, maybe we're going to have coal for stuffing in our turkeys. Well, we'll see. All right. And basically, the same was everything. Last week, while it was down the beginning of the week and then the reversal, it was really just a stabilization of this bigger picture here. The big drop, the drop on slowing momentum. Our internal gauges got to an extreme. There was the rally. Here's the pullback. And, overall last week, while a down week, was just part of this consolidation. And what I even wrote in the letter was that, look, the weekly charts are not lined up to suggest to us some big move to the upside. But the seasonality and the internal gauges do suggest that we should see some upside, not some giant rally, but some upside. And we're waiting to see if that unfolds or whether this morning is just going to be a wiggle within that, setting up a low here. And whether, we're going to break the lows and see what happens. Well, let's get through the transports here. The transports actually showed a little relative strength. They're just doing nothing here, as they typically do. Pre-market, but they didn't go down as much, and they actually reversed back up toward last week's high there, where the other markets pulled back even more. So they showed some relative strength, but that's a pretty big line in the sand right there. We'll see if it holds up or not. And Dow is down a little bit, inside that range. So mixed picture of what's going on. Maybe the futures look a little different. No big deal there in the S&P, inside the range. That could be green in no time or be a big red bar. But it's our immediate support area. Ideally, it doesn't get down there, because what we want to see is a higher low at a minimum, and ideally a higher low and a higher high day. We got the 200 right above, so it's not a setup that screams, buy, especially this morning starting out this way, but we'll have to see how this thing shapes up here. For bonds. Well, bonds, they've been consolidating within the downtrend, and we do need to see them go down. So interest rates will rise. This yield curve, we'll take a look at that maybe tomorrow. I have to bring it into this page, but it's got room before it gets near inversion, but it's getting close. So we need to see those yields drop, those long-term yields drop. Dow, same thing, chopping around here, just neutral pre-market. A lot of things are neutral. Bonds, bottoming pattern. You can't trust them. And this came off of this low here. It's up at resistance and down at right now.
Hey, Greg, I just
Wow.
sent.
Wow. Wait. My speaker's like just blasting my ears. Why is it so high? Go ahead.
Well, I want to make sure you were listening to me. So you just gave me an idea for our MT Live. I sent you a bunch of possibilities this morning, and one of them had to do with bottoming patterns. But I like the title that you just said, bottoming patterns dash dash. You can't trust them. And then we can add a twist, don't trust them without this setup. And then, that's the hook. We show them which setups are good.
All right, fine with me.
All right, good. So we just got something accomplished.
And let's just go to the monthly. That's just to see here. There's no signs of it going to turn up. I mean, some stabilization this month here with a green candle, but got a little support there. I wouldn't be going long it, well, especially not with it getting up to the top of that little trading range. That's for sure. So we'll see what it does tomorrow, where this all ends up. And so I'm just gonna put an alert down near the bottom of that bar. Since it is a range expansion bar, see how it was going up here, and as it was reaching up into this area, sellers came in, and then it pushed up and closed near the high. A lot of times, what this does, what you'll see happen, especially something that is in a bottoming type of a pattern, is that it starts up like this, right, with a nice looking bar with that small tail, and let's just say it's grinding its way up, fighting its way up there. You can see the sellers coming in, and then toward the end, right into resistance, it closes right at or near the high, where you've got buyers that are stepping up right into an area of resistance, and you say, well, that really makes sense after 5-6 days up near the top of a range. It doesn't, but it happens a lot. Look at this bar right here, closed right on the high, breaking out of a little range and started to move down. All right. Oil, maybe it could be a W bottom. We got wide range, down, wide range bar, big volume. See if that stabilizes here. And it's got that minor support and 55-ish, some support. Let's see what it does. Gold. And bottoming pattern, they're whippy. I mean, this is classic. How it went up, down, but it doesn't reach the support. It comes back up again. Now you've got a sell set up. Will it follow through lower? I don't know. I don't trust these kind of patterns to trade them. Thinking flip flop easily. Because there's no trend. It's just chopping sideways. So just let it develop and see what happens there. Just a quick look at our internals. If you are not a letter subscriber, I'll just take a look at this in the room. Sentiment, hit the bottom band, and it's starting to turn up here. We had an extreme closing reading last week. I think that was on that Thursday where we had the turn. And this was actually lower intraday, and this was breath pulled back toward the zero line that was anticipated after the run up toward the 200 area. It typically stops at the zero line on a pullback. So market has some work to do here as to whether it can actually make the turn here or whether it's going to flip flop around into the holiday. But as you can see, there's a lot of mixed pictures, but all of these ones with the yellow with the red, those are down, and just kind of eyeballing it. There's more of that than the green. Netflix things that were down near lows are, GE still going down. Amazon down 8 points. So initially, it's up to the bulls to lose it here and lose control that started on Thursday. We'll see if that happens in the next half hour or so. All yours, Dan.
All right, good morning. Yeah, so the message I kept highlighting in the videos over the weekend and stuff was if Thursday and Friday's reversal will follow through. That is the theme. And so as you said, it's down a little bit, but the amount is fine. So let's see what happens. I actually posted another put spread in the queues for Friday pre-market. And the reason I did that, I was going to post some more trades last night, but I saw the futures down 10. And I said, no, let's just wait for today to see if 30-minute lower high is going to get taken out. But then this morning, so here's my cues, upper left, pre-market. And then it rallied back to be flat. And so then I told myself, I said, all right, cool. So it's flat, reverse the morning weakness. And if it can take out Friday's high, then it's just another short-term income trade. That's all. And we've been selling off here a little bit more, but no reason to cancel the alert because it'll still be fine if it triggers. It might be extended in that point in time in which we can get price improvement, but again, we'll just play it by ear. Open trades, we do have a few more in light of that reversal. So we have a SPY. We did a couple spider put spreads. We did one that expires today in the weekly, and we did one that expires Friday also. We have IWM, and that one I like the best, even for directional and a put spread. Opening 150, 152, down a little bit, fine. If we take out Friday's high, and I like this one even better than the Qs because Friday's high is over Thursday's high. Look at the 15-minute chart. So it did have a little follow through. This gap down is adequate retracement. So that's a tier 1 trade for me. I'm already in it, but I'm going to add to it. So we have that. We did the VIX, which is some of our favorites that we do opposite. And you remember Greg asked me a question one day. He says, is there an advantage of doing this versus spiders? And I said, yeah, there is. That because of the contango on this beast, you actually have higher odds of success on this trade versus the others. But we do them both. I'm not saying just do this because volatility is a different animal. You got to, it's a fear index. So you also have to be more defensive, I'll say, for spikes to the upside when we get market panic. But we know how to do that. We have stops, we have adjustment strategies. All right, let's continue. STI, we have a put spread. MOS, we did a half lot of a core long. Boeing, we had a call spread that expired Friday. Cold, we didn't trigger yet, but look, Greg, these two tails, they looked ugly in the time, which is why I didn't trigger them. But in retrospect, those were fantastic entries right there. But it closed strong, so I still have it on my watch list. Cree, we have a covered call. XLK over Friday's high. It's going to be another put spread candidate. Sienna, we're watching. These just a couple others that are on our long list. Now let's look at some gappers. This one wasn't gapping, but I like pulling it up whenever it's in the news. And I saw in the news here, goose. Remember, it was a a bullish earnings gap the other day, and I left it on my list because I want to see how it sets up. But it's a breakout weekly, monthly. It looks great. But the news was they're going to put these subarctic cold freezers in some stores and let you put on a goose coat and go on in there and see how it does, even with a wind chill button. I thought that's cool marketing. I like it. I like marketing of low risk, no brainer obligations to try your product. And that's what that is. Go try it. JD, I saw it gapping down. This was one I know some of you were watching the other day. And I said, I remember I said, let it go over this bar and then watch a pullback to see if it would set up a higher low, because you're still swimming upstream. Daily, weekly, monthly. I didn't like this 2-bar reversal here. Bearish consolidation breakdown, new low. I mean, it just needed more work. And now gapping down to 2230. I have zero confidence in that pattern. Cenex, we're watching just as another higher low put spread, with the same, we got a bullish 180 there on the weekly. AMAT had earnings and a gap reversal on Friday, so I'm keeping that on my list. Ideally, this would be a beautiful 1, 2, 3. Or if you're Pat, it's an illusory 1, 2, 3. XOM in Barron's, whenever they have an article, if I'm interested in the article, I read it, and if not, I don't. But I just look at the stocks that are being mentioned, and there's a number of oil stocks in here. And it's amazing the ones they said they liked and didn't like. That the charts were just all over the place. There's horrible consistency. So it just means they don't look at charts in their fundamental analysis. And the cover story of Barron's, that's incorrect. It's not the cover story, but it's the editor's opening story. And I always like reading those. And it was on all of the deep financial and other ramifications of the California fires. And they said, look, it's just not as simple as, your insurance, whatever, restore it. They were going deep into the analysis. There's like, look how this is going to affect taxes. It's going to affect insurance. It's going to affect people taking their insurance proceeds and leaving the state. It's going to depress property values because other people don't want to now go stand in your shoes of a future fire. They got mudslides, earthquakes. So it was interesting analysis. APC, here's one that I like as a watch.